Welcome and happy Monday, everyone. We hope that everyone had a good weekend. Before we get started with this week's weekly webinar, Foundations for Good Trading, I wanted to go over the chat function for those who are joining us for the first time via Zoom. If you have questions, we'll take questions at the end, and you'll just submit them via the chat icon on the bottom middle of your screen. Once you click on that, the chat should pop up to the right, and that's where you can submit your questions. Just make sure that when you're submitting them, that next to the to section, it says everybody. That's that way that we receive your question. But at this time, we're going to go ahead and let Van get started.
So welcome, where'd it go? There it is. So welcome everybody. We have a couple hundred people on this one, and I think 1,300 signed up, so we'll see what happens. I'm looking forward to it. Ken and I did a dress rehearsal of this over the weekend, and it was really, really good. So I'm looking forward to what is going to happen today. And I'm basically going to ask Ken 4 questions and then let him talk on each one of those. Some of them relate to what we were talking about in the Crisis to Success and Happiness workshop, or Infinite Wealth. And some of them relate to the Trading Genius workshop, and some relate to his own workshop that he's doing. So let's see, Ken, you are, I don't see your video, I see a blank thing here, even though you're.
I think we need to, have you allowed me to share my screen?
You're a co-host. You should be able to allow to share your screen.
Oh.
Okay.
Okay.
All right. So, Kim, the first question I'm going to ask you has to do with what we've been talking about in Infinite Wealth. So, let's say somebody's trading maybe 2 hours a day, and let's say they have a $50,000 account, and they need basically to make 100% a year in order to including taxes, in order to live on, in order to be infinitely wealthy. So with a $50,000 account, if they made 2% per week, that's 104%, assuming they're not making any errors or anything like that. And I want, if you just talk about how feasible that is in this kind of market.
Yeah, I think it's very feasible, provided you are trading in a business-like and professional manner. The market right now is really well suited to do that because of the increase in volatility lately. We have noticed that. I just wanted to give a few examples from this morning while I was waiting to come on. Here's an example of the symbol Wheaton Precious Metals. Here was this was purely intraday trading, a standard path of entering at the green dot and the green dot and exiting routinely at red dot is probably our number one routine reliable pattern, followed by a sideways quiet channel, 2 more entries, and then as we speak, our stop is locked in at 32.75. So I'll just take the second set of trades that comes to this sideways quiet channel that I highlighted in yellow, and which coincides with a return to the summer on our MACD histogram 4 seasons approach. So we've got about a 20-cent risk in this yellow zone between the entry and the bottom of the channel, and we've had about 32p. We're holding at least 32.75, so that's 50 cents on a $30 instrument. So you're talking about well, that's almost 2%. Yeah, that's 2% on this position. Another probably 1% here. That's about a 3% R capture, and you get about the same thing. So that's 6% of an R capture today on one instrument in 2 routine trade series. If we looked at the same pattern because it's fractal in nature. And we looked at, this is the Aussie dollar for about the last 30 days. There was a short indication here at the red dot, covered at the green dot in the winter, a routine capture on the short side. And now we're holding 4 positions in the Aussie dollar on a swing with a stop locked in here at the red. So there's probably 5 to 8% of an arc in a measured way using the principles that we'll be talking about in our workshop later. I have a few other ones. You get the same basic idea. Ideally, we find ourselves in this kind of position. This is in the triple leveraged invert from last week, where we had the same pattern I just showed. After a sell-off, we begin to see a reversion to the mean, entry 1, entry 2, and after an excursion, we've locked in a gain, and now we've begin to structure our trades to add the second and third position, or third and fourth positions, depending on if the market's going to move in our favor. This one turned out not to have a big follow through. In fact, we got our third position in at the green dot, and we exited routinely shortly after for about a 5-hour win intraday. When we trade in that manner, we're not predicting where the market will go. We're just laying out the possibilities of what it might do. And once in a while, good things happen to bad people. Here's an example of a trade in exactly that same instrument, traded in that same way.
Your screen is blank right now, Tim. Or you're just looking at it. Okay.
How's that?
Okay. Were you just holding something?
So in the same, okay, well, this one you should see the triple leveraged SCO trade again. This one was from last week, and trading it in exactly the same fashion I just was describing. We had two routine trades for a scratch fractional win, and then what turned out to be a 45-hour win intraday with no overnight risk. How often does that happen? Not that often, but if you trade in a standard professional way, sometimes these kinds of moves will happen when all the stars align and things move in your favor. The important point to note was that we managed the risk in this trade in a standard fashion, the same way that we managed the risk in these 2 trades. In the 3 previous ones I showed, this one just happened, the market decided, if you will, to give a really good result. So what I want to say is, yeah, I believe that a 2% gain per week in these markets is certainly feasible. And there's 5 examples within the last 5 days.
So let's talk about what we do in the Trading Genius 2 workshop, or the Systems Thinking workshop. First of all, the word market itself is a process. It's people getting together and agreeing on a price. And we've turned that process into a noun, given it all sorts of adjectives, measure it, give names to the things we measure, and then think we're really trading those things when what we're really trading is just our beliefs. And I developed a beyond the matrix thinking format in that workshop where it's structured around the parts of a system, but it's also structured where you need to understand what your edge is, your instruments, all of that, and the context in which it works, and the context in which it won't work. So can you talk a little bit about how you're trading in that framework?
Certainly. So you've been watching me over the last 20 years. You've seen me continuously adapt and evolve as a trader. Central to that evolution has been an ecosystem approach to my beliefs and my actions and my understanding of the world around me. And I think that's very consistent with what you're doing now with systems thinking and the the Trading Genius approach. So what I've laid out on this chart here, and I'm not going to go into any detail on it, is simply the current version of my conceptual ecosystem for how I approach what we're going to call the market as a professional, as an actor. So I've laid out a top level process, for example, where the planning and preparation that I do puts me in a position where I'm ready to trade. And then when I'm ready to trade and get a signal, then I execute according to my plan and my rehearse, and then I assess the results, and then that rolls back into another cycle of plan, prepare, and assess. Now, underneath that top level process, there's a bunch of things that I do, a body of knowledge, if you will, about assessment, about executing, about getting into the right emotional and mental state. There's an approach that I take to learning so that every trade that I take is not just a trade, but it's also the next chapter in my learning journey. About alignment as the function of planning. How do I get my worldview into a situational view, into a tactical scenario where I can make trade? And then how do I manage this entire trading and learning and beat process in a systematic way? So this represents a static view of what I think of as my trading body of knowledge, and it's out conceptually so that when I next view, I think of this as my dynamic process. You had asked me to set up a monitor on the inside of my head to see what I was doing, because what you've helped me understand is that there's a connection between the environment that I'm in, my role and my actions in it, and then my relationship with other actors, forces, structures, and context. So that's the context within which I'm operating. And I recognize that that is a mental construct and built on beliefs. And then inside of my head, I end up going through this kind of process in every market opportunity that I see. I focus on purpose, so I now my objectives and goals, which is connected to who I am as a person, my identity. I then identify my risks. I describe the opportunity I see. I choose a method. I try to find a solution or more than one solution. And in that inquiry, the outcome is usually a set of insights of the market, which then may lead to a decision for action, which I'm then going to assess the results. And then I rely on a set of subordinate concepts and processes that I showed in the previous chart, my ecosystem, if you will. And so this becomes the process map of me acting in environment. So that is very much in line with what you're talking about in the Trading Genius and the systems approach. The crucial insight is that these are simply labels and concepts that I put on a map that help me access what's going on maybe at an instinctive level or an internal level. And it's always provisional. It's always a work in progress. And I try to make sure that I don't confuse the territory with the map. And so what this does in practice is allows me to render my actions from that complex cognitive map into a series of standard plays that tell me what to do when the market is compressed or sideways quiet channel, what to do when it starts breaking out, what to do when it gets to turning points that I've identified, what to do if it goes on reversion to the mean, what happens if it continues to fail, what happens if it simply quiets into a sideways quiet channel market, which could become extreme when the Bollinger Bands get extremely pinched. So this actually represents a process map for my relationship to what we're going to call the market. I use indicators and descriptions and parameters to define where in this life cycle we seem to. And then based on that reading, I make decisions about which systems and patterns to use. Then my process is to simply define those, trade without error, use the results to refine my understanding and refine my patterns, and then watch those trend lines of my performance to determine if I'm making progress or losing progress in my journey towards, I would humbly call it enlightenment or self-awareness. So in a nutshell, that's how I go from very complex to simplified operations and then routine trading, during the day, during the week, during the month. Over.
So let me ask another question that I hadn't put up originally. Just to let you know, the whole time you were talking there, your picture was frozen. So you had your mouth open and nothing, and it wasn't moving. We saw you just drink your cup of coffee though. But it went fine because everybody was looking at the screen anyway. So, you've been
Did the word come through?
I'm sorry? So you've been doing
did the words come through?
The words came through fine, yeah. So you've been doing workshop with me since the 1990s when you first had your tortoise and hare type program with mutual fund switching and then rebalancing, and eventually you came out with a core workshop, and then that became a online workshop, and then you were doing swing and day, and you had some really nice swing trading systems, and then that became a e-learning course, and now you've got something called adaptive trading. So what's that all about, and what's your intention there?
My observation has been that the increase of algorithmic trading and machine learning has created a hybrid market environment in which the old categories of day and swing are becoming less and less useful as separate concepts. And by that I mean there seems to be more sharing of information, if you will, between day trading and swing trading in the markets. And so a lot of the themes that happen intraday grow up to become longer term trends, started with some intraday momentum. At the same token, things that we used to think of as pure swing trading now have intraday implications as people take tactical positions around momentum and price change. And so there is the boundary between those two bodies of knowledge, in my view, has changed. And so this has triggered in me the ecosystem approach, which looks to find a way to operate in both of those time frames or across that boundary, which I don't see as a boundary anymore. So this has led me to develop ideas that are fractal in nature, that the same patterns but simply work on different time frames in a similar way. So the adaptive hybrid trading is a way to bring all those ideas together to develop a set of indicators, sense-making procedures, patterns that we can trade in any time frame on standard instruments. And that way we get some synergy from the trading patterns and the efforts that we put in. The streaming workshop is going to be an approach to understanding that holistic, integrated approach to the markets, and then it will help people find the time frame that works best for their situations. Some guys are trading these patterns like I am on minute by minute basis. Some are using hourly charts, some are using daily, some are using weekly. The important insight is that it's the same patterns, same type of decision, it just works on a different time cycle. So the way we use the systems and insights is identical, but the time frame really is adapted to a person's life circumstances, if you will. So that's been the evolution of the workshops and the bud knowledge over, I'd say, the last 25 years we've been working together. I'm really happy with the way that this thing is working out. The first couple months leading into the workshop will be a way for participants to acquire the insights and the patterns and the knowledge, and to develop good personalized questions about the material that I can answer in June as a result of their study and interest. That way I can tailor the delivery of that workshop specifically to what they're trying to do in application of the knowledge. So it's this will be our most personalized workshop ever in that sense. Then the follow-on will be one-on-one or in small groups with me if they have similar interests, which I encourage, to continue to work in the 3 months after that course to own and operate this approach to trading. Over.
Okay, so let's talk about what you think is going on in the world right now, and how you think it's going to change everything.
Well, as you know, I teach strategy and logistics and change management for the Army to all our organizational leaders. And the time of the pandemic is revolutionizing the way we deliver professional military education to our leaders. We've, the last 6 weeks, completely converted to a distance learning model of teaching. That's represented a revolutionary change in the Department of Defense. The funny thing, or the ironic thing, I suppose, it looks exactly like the adaptive hybrid trading workshop. And because of the prep that I've been doing with you and for this course and in my own trading, it's actually much easier for me to teach these guys in that way. We still have the ability to engage like this, but now these guys have the ability to access about 60 gigabytes of prepared lesson material that I've accumulated over the last 20 years. They can study that material on their, then ask me questions in small groups like this. And then we can actually discover if the knowledge is transferred but in a different way. Instead of doing it in the classroom, we do it in a virtual classroom. So in terms of developing leaders for the future, the COVID virus has really just accelerated our adaptions for learning. In the larger world, as a strategist, when I look at what's going on, I see some immediate tactical changes that are going on. Like right now, if you were to use Maslow's hierarchy of needs, you're seeing us discover what society actually needs in order to continue to function. Our social understanding of what's important and what we value is going to change dramatically and irrevocably as a result of this. This will have as large an impact on the psychology of generations as the World Wars and the Great Depressions and the Industrial Revolution. It's big. At the operational and strategic level, the kinds of changes I would expect to see are a complete reworking of the financial, social, political relationship between the people, businesses, and politicians. People are going to wake up and realize that a $4 trillion handout to large cap companies that gives a pittance and doesn't solve health care for the people is not a sustainable model. So there's going to be some kind of socioeconomic reordering. The on that in the markets and asset classes is going to be profound, and it's going to be a game that's played out with volatility over the next quarters, years, and decades. So the wave of change that COVID virus represents in global markets is going to be extraordinary. You can imagine pretty easily how every nation in the world is going to look at this as a wake-up call and recover their national industrial base. No nation is going to want to be held hostage to global supply chains, and so you're going to see a return to basic industries and materials and national agriculture and transportation networks that's going to rework the conception of what is honorable work. And the movement of capital to reflect that kind of a change is going to take decades to unfold. So we'll see how that plays out. What I think we can count on is a continued volatility as political changes and economic changes continue to reconfigure the relationship between market participants. So an ongoing adaptive method of studying those trends and characterizing them in shorter terms so we can act on them is going to be what adaptive traders need as a way to sense and respond to these kinds of ways of change. Because this is not an overnight fix. This is going to take decades to unwind. And then the work that you've been doing on cryptocurrencies, for example, is certainly going to be to discover how the free market monetary policy and currencies independent of nation states and their interests. The volatility, and that's going to be extraordinary. So adaptations to in the time of the virus is going to be persistent and profound and compelling. And folks that know who they are and what the inside of their heads and hearts look like, and who have aligned themselves with others in collaborative learning networks, are going to be well positioned to help the world and to help themselves in an honorable way. So those are some of the larger changes that I see unfolding in front of us on the big screen. Over.
So you talked about, you said it was going to be definitely high volatility in different asset classes. Can you be more specific about that? More than you just were?
So I think crypto already has a certain amount of volatility baked into the cake. And I don't see that volatility disappearing because it operates on an economic basis between interested parties, but those relationships have an impact on global economics and politics. And so the implied volatility of nations making a cryptocurrency non-legal tender or a criminal activity at a stroke of a pen is going to keep a certain implied volatility into that, and it will be in its own asset class. I see volatility in asset classes like basic materials. You're going to see a premium being placed on long-term ownership of that as an asset class. You're going to see people looking to buy the Chinese national commodity contracts that they've developed. Who knows if those things will be nationalized or not. You're going to see a re-engineering of the entire healthcare system in the United States. That's 15% of our economy is tied to it. And a public-private partnership in healthcare is going to affect the way the pharmaceutical industries and healthcare services are delivered to people. That's going to have an impact on the national educational system. So all of those large changes are going to introduce external volatility into what had been cyclic industries that you could rely on and predict how they were going to behave based on historical norms. Well, when all those historical norms are thrown out the window, what you're going to see is an increase of volatility as market participants reposition themselves for the long term. So that's going, in my view, to increase the level of volatility in those kinds of asset classes and all the other ones that I talked about before. I just think you're likely to see for the next 2 to 3 years an increase of general market volatility altogether. That's going to favor adaptive traders who can understand day trading, swing trading to take advantage of those swings in volatility. Just the difference between the policies proposed by Trump and Biden are going to have enormous consequences for the healthcare industry and the financing of corporate America. So between now and November, the volatility is already baked into the cake, and then you're going to see a large reaction at the end of the year in the same way we saw the Trump-Clinton volatility happen when that surprise occurred. So the signal generator for volatility just went into overdrive for the next 2 to 3 years and probably for the decade over.
So talk about trading volatility a little bit, because uh, every time volatility goes up,
Well, sure.
people talk about everybody being scared and whatever, whereas good traders just make a lot more money.
Can you see that chart again? The big one on inverse oil?
No, we're seeing the learning ecosystem.
Okay, well, it'll show up in a minute. But I talked about this one on that 45-hour trade from last week. So volatility happens on at least two levels. One of them is an instrument that has reasons to become much more volatile than it had previously. So the first example of that would be the oil markets. And at a time of a pandemic, you see a geopolitical wrestling between the Russians, the Chinese, Saudis, and the U.S., all designed to have long-term economic impacts on oil and oil service and industry. So that trade war could be seen as a way to cripple U.S. domestic oil production and fracking. When you multiply that in the pandemic, you get an extraordinary volatility in the price of oil as entire industries and policies come under pressure. So oil as an instrument experiences volatility. Well, the volatility in oil has a trickle down or a leveraged effect, even if you will, on all of the basic industries that rely on long-term energy positions to normalize their business. So they all have to become involved in the volatile energy trade to set themselves up for success. The second of volatility trading has to do with the volatility instruments themselves. Instead of trading in the volatility of underlying entities, you can trade instruments like VXX and UVXY and VX and SVXY that trade the volatility instruments themselves. So they're not anchored to any tangible underlying asset, except for the psychological state in the moment of people who are operating leverage on fear and greed. So the volatility instruments themselves become candidates for volatility trading, or you can overlay volatility on an asset class that is experiencing greater than average volatility. And so you become, in effect, a pseudo volatility trader in that regard. And if you follow the volatility as it moves through the business cycle, you can trade instruments that are experiencing abnormal volatility. Now, the advantage of that approach is that everybody who is comfortable in the asset class according to long-term historicals now gets shaken out of their boots and their positions when this wave of volatility shows up in their little sub-market. Someone who's comfortable trading volatility simply looks at that as an opportunity and then can start trading the waves of fear and greed folds in that asset class. When it starts calming down, going back to normal, you can move on to other areas where volatility is beginning to manifest. So volatility trading can take a number of different forms, as long as you recognize that it's connected to people respond to a changing ecosystem conditions. You realize that it takes the form of herd behavior, and that's human psychology, and that's connected to your work on beliefs and management of emotional mental states. People who have that skill set have a baked-in advantage for the long term, at least as far as I can see going forward. Over.
All right, thanks, Ken. You mentioned a couple of things like what was happening with Bitcoin. It was interesting because Bitcoin is supposed to be a totally uncorrelated asset with everything else. And it's amazing how much it comes out to be zero in terms of other factors. But when this move started, Bitcoin dropped 50% in just a few days. And there were two things going on. One I knew about, which was basically a Ponzi scheme that was going on in China, where these guys had acquired a lot of Bitcoin and Ethereum and needed to unload it. And they didn't care what price they were unloading at. So the trading desks were dropping the price so they could unload it. And then a lot of people are trading Bitcoin on high margins, like 1% margin. Like imagine trading something with the volatility of Bitcoin by itself, which can move $1,000 in a day easily on a 1% margin. And what really happened was huge margin calls on Bitcoin for all of those people. And Bitcoin, even though there's supposedly 17 million, of which 5 million has disappeared, most people are hanging on to their Bitcoin. It's probably a small amount of product that's really out there. And when you've got people having to unload, trading on 1%, at 1% of leverage, or 99% leverage, it can be really interesting. So I see this thing playing out for maybe 2 years. Do you agree with that? The whole situation.
I think the next 2 years, yeah, I think the time of the pandemic is at least a 2-year volatility. I think the crypto as part of that whole equation is certainly going to respond to that kind of volatility. And here's why I say that. When you are looking at the Fed putting between $6 and $10 trillion of new money into markets, it has to go somewhere. Some amount of that is going to get spilled over to crypto. And crypto as a response to an inflating currency is a compelling trading story. So you're going to see the volatility of the Fed's actions ripple into crypto on its own. By the same token, I think people are going to look at crypto a way to around national and regional currency policies. And so you're going to get this wild west of crypto and volatility that I don't see changing in the foreseeable future. And at the same time, just on a political level, just to make this point again, it would take a stroke of a pen for a nation to say any company that's caught doing business in any way in crypto is going to have their assets frozen. That's not even hard to imagine, especially if governments and their sovereign wealth funds and the relationships with banks are trying to control the economic environment through national currencies. Well, crypto represents an end run around that, and it loosens and dilutes the power of nations to govern their environment. So with a single policy stroke of the pen, the rules on crypto could change overnight. And this country in the 1930s confiscated gold, and that changed markets overnight. Why wouldn't they do that in crypto? The precedent's already been established, and the threat to world order is obvious to anybody in that position. So to me, the volatility of crypto is inherent and baked into the cake and can't go away on a conceptual level. What that tells me is that you have any assets that you put in crypto, you have to experience the full emotional loss of that entire position at the moment that you buy the position. And that way you have a chance to become immune to the feelings of fear and greed and loss and gain associated with the rise and fall of your position. If you just accept the fact that you lost all that money at the moment that you bought the position, then the worst feeling has already occurred to you. You've already experienced the worst thing that could happen. So that frees you emotionally and conceptually to manage the position in a professional way. But you have to actually go through it and the feelings of the loss. You can't just think about it and say, yeah, I lost that trade, I lost that position, but not really. You actually have to experience the emotions of that in order to free yourself to make professional decisions with that position. So That's my thought on volatility and crypto and the markets going forward, and a way to respond to it in a healthy way. Over.
So I'm going to throw this thing open to questions now at this point, because there are a lot of people and there are probably a lot of questions. And as a supposedly an hour webinar, we only have 15 minutes left. So we'll see what comes up as questions. Jamie, why don't you come back on and start asking some of the questions.
Again, if you have any questions, just feel free to submit them via the chat feature. We did have some few questions come in already. Is your ecosystem your business plan or part of your business plan? If part, what are the other components?
The short answer there is that my business plan looks identical to that to Van's workshop on your trading business plan. That's such a good model that's what my business plan structure looks exactly like. The ecosystem for me is in that boundary between self, system, and market. So the ecosystem actually represents all three of those domains in a relationship. Let me, if I can, I'll put it on this. If we look at that little diagram in the lower corner, can you see that now, Van? The three circles?
Three circles, there you go.
Well, I'll just talk through it. For me, the ecosystem is the largest context in which my business plan is a. So the business plan is part of the relationship between me and the market and me and systems. It's in that boundary between those, but the ecosystem describes that large environment in which me as an actor and my business plan, which is my protection, my insurance, stormy weather. So it's larger than the business plan. The business plan is the way I implement my thinking and acting, if we put it that way. Over.
For your upcoming workshop, Ken, will there be recordings available?
Yeah, our plan is to record the Q&A sessions in June, certainly. The other recordings about the ecosystem lessons are kind of already in place for different elements of that ecosystem. So in every one of these areas of plan, prepare, execute, and assess, the management techniques, the learning techniques, the planning techniques, all of those lessons are already done, and folks that sign up for that will have access to those recordings so you can study them on your time. I trust you enough to know where you think you need to be in any of those areas, and then you will have access to those lessons. And then up until about 1 June, you just engage in Q&A with me directly, and then we'll improve your understanding as we go. 1 June, we'll just put a freeze on the questions so that I can compile all of the questions that the folks have asked, and then come up with a set of prepared responses in June to address those unique personal questions you may have. And then in the dialogue, in the workshop, we'll be able to ensure that we get an understanding of the questions and answers in detail. The follow-on sessions, the after workshop, if you will, as you then digest those questions and answers and implement them in your own trading in some fashion, we'll take the next 3 months to ensure that the lessons have been understood and the implications developed and all that. So yeah, the recordings of the prep material are already in hand. There's thousands of hours of material. And then there will be recordings of the Q&As in June, and then there will be recordings of the follow-on engagements in the after party, if you will. So short answer, recordings will be made.
So I have a question based on that, which is if there's thousands of hours worth of material, you know, and the workshop starts in June. Nobody's going to go through thousands of hours worth of material. How do you know what to go through and what to do?
I've organized the ecosystem into a series of structured courses. The first one that everybody will take is the boot camp. So the boot camp is a set of low risk, high payoff concepts that equip you to trade the patterns that I showed this morning, those 5 trades. It basically focuses on that pattern and the supporting ideas, and then how to prepare yourself mentally, emotionally to trade a small set of instruments. So my good friend in Florida, Joe Greco, 45 years old, father of 3, son of an Italian immigrant, owns 3 businesses: realty, insurance, and real estate. And in his spare time, is now trading and knocking out 3 to 4 hours a week routinely in a couple hours in the morning. So I know it's possible. He came to a boot camp in November, came to one in December to refine his understanding, and is now a brown belt in tortoise style trading. And so what we did in the boot camp workshop is take the lessons that he went through in November and December and looked at that as the all-important basic training, if you will. And so you can start trading those systems just from the boot camp material. So that's a structured subset of the lessons that I've developed, and that's what the folks in the June course are going to start off with. Then I have a psychology and coaching course that helps you acquire the learning skills that will let you get through this material quickly using the principles of adult learning theory. So that's just from 25 years of working with UVan and then teaching in the military college for 20 years, what we're doing with distance learning. There's just the best practices on how to acquire knowledge in this way. So I'm going to equip you with that learning style theory and learning manner theory to help you access this material in the best way. So great question. The boot camp focus and then the individual learning course will be the first set of 20 to 40 hours of material, and then that'll set you for success. Over.
Do you believe the cryptocurrency should be regulated?
It's kind of a joke in some ways, because that's asking a value question, which means, so if you're in power and you see cryptocurrencies as taking away your power, then you would believe cryptocurrencies should be regulated. If on the other hand, you want power more decentralized, then you don't want cryptos regulated. And I know, so we're in a situation, for example, where the United States has basically knocked out maybe 2,100 cryptos from trading. We've got a portfolio of maybe 50 to 75 cryptos that we can trade, simply because the SEC put its foot down and says cryptos are securities, and ICOs are not legal because it doesn't allow us to regulate them. At minimum, they have to go through Reg AA plus to offer a new coin, which means we get to approve that. But at the same time, there are decentralized exchanges where you can trade at least some of these things. It's not easy, and the main things came out. And I noticed Binance opened up a base in Nigeria, for example. So they're looking. They'll be all over the world, and they'll do it in a certain way so they can get around as much as possible. And it becomes sort of a game, and the government says you can't play it. They really can't stop it in a sense, because it would be all over the world, and you could do peer-to-peer exchanges. They'd have to shut down everybody's computer. But games tend to be, the rules set up by games and how strong they work has to do with the severity of punishment and your thoughts about how easy it would be for you to get caught. And that's basically how the rules come about. So I had to answer that one.
Yeah, I'd agree. I would agree with that. I think the question is, could they be regulated? And the answer is yes, they could be. And if I were going to predict, I said they will be, because anything that can be regulated ends up becoming regulated. Imagine a government simply said this: any business that has any use of crypto is going to have its assets seized. And then they issue letters of marque to individual pirates and say, if you guys can capture information that shows any business is using crypto, you get to keep 10% of their company or whatever you find. And then these are the standards of forensic evidence required to demonstrate that they're guilty of using crypto. That would change the world overnight with the stroke of a pen, would cost the government nothing, and would allow them to regulate that market de facto. Over.
Next question.
If the government allows trillions to be pumped into the economy, why would they allow it to drift off to crypto?
Repeat the question.
Yeah, your question, yeah.
If the government allows trillions to be pumped into the economy, why would they allow it to drift off to crypto?
That's exactly my point. Why would they? I wouldn't.
Well, the government is basically putting their money mostly, I mean, they could put it in stocks, but mostly they're buying debt instruments, including junk bonds now. I don't know to what extent they're buying any stocks. But if you...
the U.S. dollar a cryptocurrency, but it lacks the algorithmic certainty that Bitcoin has. But in almost every other respect, it looks just like a crypto. So why would they allow the competition?
How do you recalibrate yourself if you find you're out of sync with the market? For example, if you have a series of trades that fail beyond strategy expectation.
Yeah, good question. For me, it's the concept is in this area of mindfulness, if you see on the screen there and under the assessment. So one of the things that I manage is the equity curve and then my emotional equity curve. And so I have a set of related to mindfulness that allow me to get into the zero state and focus on what's important. So I recognize the physiological signals of oncoming stress and behavior triggers. And I have a wedge between the impulse to act and the action. So that's part of the preparation process of being ready to trade, is to be ready to recognize that signal. That's no different than taking a trade. If you look at the 10 tasks of trading and apply it to your own psychological state, there are markets and filters and signals and entry conditions, and then management and exit rules. That's the same approach that I take to managing my emotional and mental state. It's the same thing. So you have to trade, I believe, in a detached manner. Or let me say it this way. I believe that I have to trade in a state of detachment so that I can observe the trading process and look for evidence that my mindset is not correct. So the way I do that in execution is I say I have to have 4 things to take a trade: time, will, pattern, and money. I have to have enough time left in the day to take the trade. I have to be in a zero state of detached awareness, the will. I have to have a recognizable pattern, and I have to have risk capital in the account to take the trade. If one of those four is not present, I will not take the trade. The one that changes the fastest, the one that is subject to most volatility, is will. So that is the central task of trading when I'm executing. The most important thing I can do is monitor my will. The trade patterns and the execution almost trade themselves. So monitoring will is most important. If I'm not in the zero state, I don't take the trades until I am. So that's the central task of self-management. So very good question. And
I have a different answer to it.
Long term, yeah, good.
My answer is quite different, which is, you know, our super trader program's designed around managing yourself first and getting people to a state where they develop mastery in that phase before they even move on to trading. Most people don't want to do that. They want to skip that and go on and get the magic secret and then think about managing themselves as an afterthought. And that's not the way we like to focus on it. Some people do, and some people get away with it, but it's not the best way to go. Peak performance, which is coming up, is all about that too. It's just self-management.
What tools do you use to back test strategies?
I have a community of practice that loves to back test. There are a number of guys that love to back test. So that's my method of back testing, is that I have an idea. I look at a handful of charts to see if it looks tradable. I craft a tentative solution. I forward trade it. When I'm satisfied that it's not stupid, I ask these guys to back test it for me to see if there's any reason we couldn't trade it. And then I trade it forward while they're back testing with skin in the game. Because for me, no amount of back testing overrides my experience in trading forward with that system. And I trade at a level of risk that allows me to experience that system going forward to see if I could even trade it. But tools for back testing, visual charts, Excel spreadsheets to look at signals. I have a base of daily reports that goes back 10 and 15 years that I can then drop into that time frame and trade it forward using that kind of space trading. TradeStation is good for back testing. AMI Broker is good for back testing. So really the community of practice that we're developing satisfies my need for back testing. Over.
Ken, are you confident you could achieve 100% returns in most of Dr. Tharp's 6 market types, or mainly because of current extreme volatility?
I'm not as familiar with the details of Van's system or market classifications as my own. I try not to cross the wires too much.
Quiet would be pretty hard to achieve that in.
Yeah.
Sideways quiet would be pretty hard.
In my view, there's always something working. In my view, there's always something working. That's my working hypothesis. So there's some subset of the market that is experiencing activity. So yes, I'm confident.
And Ken, could you tell us which charting software you use? I notice you look at currency, so just checking your systems are applicable to FX and indices.
I use TC2000 as my charting and signaling software. I execute in the software of the brokers that I use, but I find TC2000 to create beautiful charts, and they offer ETFs, equities, currencies, and I've had no trouble translating from TC2000 into brokers systems. The one that's up is an example of the Aussie dollar on daily charts with TC2000. So it makes beautiful charts.
When you say Joe is doing 3-4R per week, if he had 500K, is he doing 3-4R on the 500K or on a smaller portion of that principal amount? I'm asking about the absolute dollars versus percent.
He started out as an example using $100 risk capital as the R when he was in the prototype phase trading forward. He has since scaled that to $400 per unit of risk, and so that $400 now is his R multiple. And the instruments we trade allow for scale and size. Go ahead.
And this question is for Dr. Tharp. How does Trading Genius number 2 expand on Trading Genius number 1?
Trading Genius number 2 is really systems thinking. And but I wanted to emphasize the you only trade your beliefs part, which came out of Trading Genius number 1. So Trading Genius number 2 is basically a course that Ken and I started together. Ken is probably the only person I know with a master's degree in system thinking. And then he got a PhD in decision making under uncertainty. I don't know whether that falls into systems thinking or not. But his trading, his trading was so different from anybody else's. I said, well, I think it's time that you do a course in systems thinking to see how that, so we can see how that works and how and it's important because traders do work with systems. And the first course was kind of not organized. So I wanted to really turn it into a e-learning course, and it wasn't ready for that. So I said we'd do another one. And then Ken couldn't make that one, so I did it by myself. And then probably about 7 more courses were done before I was happy that it, mostly to super traders, before I was happy that it fit the bill of what I wanted. And I think the one now is pretty close. But it's really systems thinking with the idea that everything is made up, and your beliefs are filters to reality, and you can only trade your beliefs, and all that. If you look at Ken's diagrams here, almost every word he uses, especially in the other chart, is a nominalization, which means it's a process that he's turned into a noun to make it like it is something real. But it's just a process. And it just shows, you know, how language can really distort everything. And, but if you understand systems thinking, you can make it work, find out what's useful. So if you look at that chart, theory, experience, practice, teaching, those are all verbs. Environment, well, you really can't put that in a barrel, so I'd say preferences, SQN, TQN, skills, drills, those are all, I mean, I just read the whole first column and they're all normalizations.
And do you know an alternative for ETFs since traders from Europe are not allowed to trade ETFs in the US?
Yeah, there's a group of traders in Europe, you know, in the Eurozone that are trading contracts for difference and also currencies, and they're using the same fractal patterns and time frames and procedures to trade nicely in that environment. So they're trading these patterns on the instruments that are available in their local markets, also contracts for difference, also futures, also currencies. So the patterns are fractal in that nature.
I'm not able to day trade 25K pattern day trader rule. Are there systems available for swing trades?
Yeah, there's two answers to that one. One of them is the mechanical swing systems that we already have the e-learning course for are a good place to start. And then the strategies that we teach in the hybrid course are going to show how to relax those criteria and then trade these patterns. And so what I'll show you on the screen here in a second. So you see three different patterns on the screen right now. One of them is what we call the owl pattern, which is a version to the main. The second green dot is a pocket trade that is a reinforcement or the second position on a momentum trade. The third pattern, the third green dot, is a sideways quiet channel breakout. All of those patterns are fractal, and this could be daily bars, and those could be swing trades. Those could be weekly bars, and these could be swing trades. It just happens that these are on minute charts. So the risk per share is larger on a swing trade. The time it takes for the trade to unfold will be longer, but the essential elements of the strategy and systems are identical across time frames. Over.
I signed up last weekend for your course. How will the trainings be available?
They'll come. You'll get a student ID later today that gives you access to a site called talentlms.com, and that is a online corporate e-learning system. I've got about 35 different courses on there that have the lessons ready to go. You'll get access to the boot camp and that initial coaching, and learning workshop, and then you can work at your pace, and then send questions as we go.
One question that came in that I saw somebody else answered was, probably because you're screen sharing and maybe your bandwidth isn't too big, whenever you're talking, you're pretty much frozen. And if are the classes going to be different, using a different format?
Yeah, one of my partners here in town has contract for the emergency internet services for the county and state. He's on the internet backbone, and I'll work from his office in June.
So there you have it. I have fiber optic cable in my house, so it's pretty good, but not everybody has that. So maybe about 3 minutes more worth of questions.
Okay. Do you pair up attendees like the brown belt you mentioned to mentor?
I'm going to encourage that that people get into self-directed work groups. So one of the things we'll do is introduce ourselves and our interests and our location, and then there will be some obvious small groupings of between 2 and 4 people who agree to work together as a learning group, a learning team. That turns out to be the best way to get after the material. So we'll do that early in the course.
Are the patterns taught applicable to different charting software?
Yes. The indicators I use are all commonly found on charting packages, and it's just a matter of translating it to your charting software. There's no proprietary indicators.
And do you expect to teach this again in the fall?
No.
And that looks like
I'll make that decision after we get through a cycle of this. I have to measure the time commitment to the prep work should be self-directed. I've already put the time in on that one. I don't have a good handle yet on the the follow-up, and so I want to be careful before I commit to a second iteration. If it goes well, then yes, but we'll have to see.
The bottom line on this one is that most of Ken's courses are now e-learning courses, and he's doing this one course this year, so that you can count on.
How do you plan your exits for profit in each trade, in a percentage of gain or in technical exit?
Good question. Yeah, you should see, Ben, can you see the ecosystem chart now?
No, right now I'm just, yeah, there it is. Okay.
All right, so I want to zoom in on that third line there, the X stop versus the P stop. So that's a technique I teach on trade framing. And so in every pattern that I trade, there is a hypothesis of why it should work and a hypothesis of why it should fail. I try to find a critical state in the market in which, after a success or after a failure, there's a large move. So I'm looking for conditions in which there's a large move possible in either direction. That's what makes it interesting and a critical state. So whichever direction that trade goes, it's to enter, and then there is an execution stop. That's a price that tells me that side of the trade just failed. That's the X stop, the execution stop. I want that to be small. There's a position sizing stop that I use, which is a multiple of the execution stop. I like to set that at 5 times the execution stop at a minimum, so that if the trade fails on the next bar, I take a 0.2 loss, plus or minus slippage, and then I take a fractional loss. I want the potential reward to be 2 full position sizes. So that really tells you I'm looking for a routine capture of 10 times the execution stop. So I find out what those prices are, and then I use my risk per trade to compute the size of the position sizing. So that's one of the techniques. That's one of the lessons, a very important lesson in the boot camp, of how to frame the trade in such that when the trade fails, it's small. When the trade wins, it's large. And then you plug the numbers in for your position sizing and risk appetite, determine the specific position size that you carry. Over.
Well, thank you very much, Ken and Van. At this time, we're going to close the session, but if we were not able to get to any of your questions, just feel free to email us at customerservice@vantharp.com, and we'll be happy to answer any questions that you may have.
What I would offer is, if you collect questions and send them to me in one batch, I'll record an answer on those and send you the consolidated answer video, and you can distribute that to anybody interested. That would be an example of the advanced hybrid workshop in a nutshell.
Thank you, Ken.
So Ken, I'm going to do on Wednesday at the same time, I'm doing the infinite wealth. Can you stick on that, come on there for like 10 or 15 minutes at the beginning and talk about one of your examples again?
Certainly. Just send me a link for the time.
Okay.
Thank you, everyone.
Thanks for the opportunity, sir. Always good to see you.
Yeah, thanks, Ken. Good job.